Again, welcome everyone to this global market update in collaboration of Octopusbot with CME Group as part of the Agri Month. We'll start with welcoming from David from CME, and then we'll kick off with the global market update. David, over to you.
All right. Thank you so much, Carolina. And thanks to Octopusbot, for this very kind invite, to have me here and then to share with the audience here, a little bit more about CME Group. So just want to introduce myself first. So my name is David, and I'm the Commodity Products Manager working in the business line management team, covering all the commodities products within CME Group. So this group that I work for is really the world's leading and most diverse derivatives exchange, of offering quite a number of benchmark contracts, cutting across all major asset classes, interest rates, equity indices, foreign exchange, metals, energy, and of course, the most relevant for today's webinar, the agricultural products. So CME Group not only offers futures and options, for mature markets such as corn, soybean, and wheat. We do have derivatives for niche markets, such as lumber and urea as well. So some numbers to give you a perspective, the average daily volume of CME's agricultural futures and options are trading at almost 2 million contracts a day this year, with a combined open interest of over 10 million contracts at the moment. So the wide variety of the futures and options that comes with great liquidity, which allow market participants to manage their risks, with these products in an efficient manner. So of course, today's agricultural sector is experiencing one of its most dynamic and unpredictable periods in recent history. Producers, traders, and agribusinesses are facing, a series of disruptive events, such as the ongoing, Russian-Ukraine conflict, macroeconomic uncertainty, you have your trade wars, and this list really keeps going. So this volatile backdrop underscores really the importance of making informed decision and the need for robust risk management tools. And here we are really fortunate to have Octopusbot as part of their support towards CME Agri Month that runs for May and June this year, where we kind of celebrate all things agri, to share a bit more about their view and thoughts on the current agri landscape and really how AI can play a part, in helping market participants to navigate through these complexities. Just one last note here, actually, should you need a bit more of some of the educational content that we prepare for this whole Agri Month here, you can simply go to Google and search up the 5th annual CME Group Agri Month. There will be this landing page with all the exciting content that you can, learn about a bit more about the markets and then the products that's available. And I believe we will all learn a lot from the presentation today. So I shall keep things short and sweet from my end. And once again, thank you so much, Carolina, for having me here. And I will pass the time back to you.
Thank you so much, David, for the introduction. And yeah, we'll then get started with the global market update. All right, welcome everyone. Thanks for joining today. So just a bit of what we'll review today is we'll start first with a high-level overview of what we do at Octopusbot for the ones that don't know us. And then we'll go through the global wheat S&Ds and some details about what the major wheat importers are doing for this season. We'll cover a bit some details about the current state of the Australian wheat production, as well as the European wheat production, to finalize with the what are the main bullish and bearish factors for the global wheat this season. And then to finalize our webinar today, we'll receive questions from you. All right, starting with the high-level introduction of Octopusbot. I'm Carolina, one of the founders of Octopusbot. At Octopusbot, we provide real-time and accurate data for grain and oilseed markets through AI forecasts. So for this, we collect data from thousands of sources worldwide, starting with over 100 years of weather data, satellite images, historical yields, productions, and planted areas at the local region level, global S&Ds, global prices, cash prices, and indicators, managed funds. And we also include in the models anything that is impacting the markets for the season. So any global events that we see that may have an impact for the commodity prices during the season. So then with this data, we train different AI models. We have over 2,000 interconnected AI models in our platform that simulate the grains and oilseeds markets to provide high accurate estimates. So combining this historical data, we trained different machine learning models that we have different targets to provide, to have very accurate models. And then finally, once the model is trained, we can make predictions for the season using the year-to-date actuals plus the weather forecast that we run through the trained model to obtain an accurate prediction. We follow this approach in different levels, so we make sure that we cover everything that's happening in global grains and oilseeds from the local regions to the global markets. So the first level is the local region yield forecast, and we cover all the main regions in the world growing grains and oilseeds. We then multiply this by planted areas for every country to obtain the global production. Similarly to the yield models, but this we estimate internal demand and consumption for by country. These models are based in macroeconomics, considering CPI, GDP, and a couple of hundred factors that goes into this model to obtain an estimate on the global demand. Then with these three levels of information, we estimate the global supply and demand indexes. And finally, for the prices, we create different scenarios of these S&Ds, capturing the potential scenarios for the season and run that through price models to obtain a price range direction for the season. So on the production models, we have been providing accurate estimates for the last 3 seasons, and every season the accuracy of this model improves, as well as the lead time in what we provide the information. Some examples of the previous seasons. We have here the aggregated models at the country level. So behind this, we have all the regional estimates, and we start producing the estimates very early in the season, even before planting. So the first example is Australia with production on the season 2022-23, very early in the season, so 6 months ahead of harvest. Models start predicting that we're going to have a record high crop of wheat in Australia, and this is because we have a La Nina event in the forecast. We have some variances in this forecast because of the conversion of the weather forecast, but with an upward trend to finalize close to the 40 million tons. And as you can see, other agencies came up to this number at the end of the season. Similar examples for other crops and countries around the world, like the US wheat production on the season 2024-25. So last season, very early in January, Octopusbot models start predicting production for the season is going to be around or close to the 55 million tons. And as you can see, the USDA only came up to this number 6 months after, in July 2024. And other similar examples for U.S. corn production on the season 2022-23, where Octopusbot estimate at the start of the season were much lower than USDA and other agencies, but they gradually reduced their estimate to be very close to Octopusbot estimate at the end of the season. And a similar example for the European wheat production on the season 2023-24. So overall, these models give you a really precise view of how the crops are going to perform worldwide worldwide very well ahead in the season. So the estimates that we are going to cover today are following this methodology that I have described. So over to Rodrigo now. He's the other founder of Octopusbot, and he's going to walk us through the market update today.
One sec. Okay, thank you very much, Carolina. So as Carolina mentioned, today we're going to cover the machine learning estimates that we produce every week or every month, right? So what you see on your screen is the global S&Ds. This is the latest one that we released last week. And basically every production estimate that you see, or most of the production estimates, that were built, using machine learning estimates. Consumption estimates as well, so we use our consumption models using macroeconomics. Starting stocks, it depends on the agency. Ending stocks, depending on the trade float. So we look at the trade float, shipping stamps, for some different countries. Stock to use is just a calculation, between the ending stocks and consumption plus divided by consumption plus the exports, right? So yep, just looking at how it looks, for this year. And differences, with the USDA or different agencies. This is where we can see, the disconnections, from the market. So the first one is the Russian exports. So this number is quite controversial, for the year. You have the USDA forecasting 45 million tons, and you have agencies such as Sovecon, for example, saying 35 million tons. We're going, with a number at the middle at the moment, right? So it's pretty early, so we haven't started, the next market year at this stage, right? But this is going to be a critical number, for the next year, right? So if we have 35 million tons, it means, we're going to have 5 million tons less, for the supply, for the importers, right? And if we go, to the 45, it means, a much more bearish number, right? The second one, is that everyone talks about, is the exporters stock to use. So this number over here, right? So this number, as you can see, it's one of the lowest of the last 20 years. We thought that we were going to end, lower last year. But because of the US, because they've been accumulating stocks and they haven't been exporting as much, in comparison, to previous seasons, they keep accumulating stocks, and that could explain, the difference or negative basis, between the Chicago market and Matif, for example, right? The next one, which is interesting, which is something that we're getting, from our models, is China. So China is included in this number. The USDA is forecasting around 142 million tons. Our models that we've been running, for the last 3-4 months have been picking up lower and lower productions on pretty much every iteration, mainly because the focus has been converting lower than what it was supposed to be. And now we're forecasting maybe like 4 or 5 million tons, lower than the USDA number. June is supposed to rain over the median, so 125% of the median or something like that. But based on the conversion of the focus, that might not happen. And if that happens, that number is going to go down. That's very important for Australians, for example, right? Because we do get a lot of export, to China. We can see a bit of a jump, in the export in the last couple of months in Western Australia, and that's probably because it's getting drier in China, right? And by the way, last year, for example, for China, we obtained much higher numbers than the official estimate, from the government, and much higher than the USDA for corn and wheat, right? So that could explain, why they're not importing as much in comparison to the last couple of years. The next one is the world starting and ending stocks. So you can see that we have a deficit, this year that we're forecasting of 8 million tons. The ending stocks, they've been going down, for the last couple of years. So now we have the lowest since 2016. And if we look at the stock to use, which is just divided, by consumption and exports, we can see that we have the lowest stock to use, since 2014. So that's quite bullish, for the fundamentals, for global S&Ds for wheat. Okay. Then on the bearish factors, then in our view, they weight a little bit more, than the bullish factors. We have the European Union, so these 135 million tons that you see here. It's a recovery in comparison to the last year. So last year, they produced 122 million tons, as you can see on the chart, right? So it's a significant recovery. This number has been trending down, in every iteration of our forecast, mainly because of the conversion of the focus in France and Germany and Poland as well, right? But at the moment, we don't see much of a risk or this number, going to the last year numbers. Okay. Then the US, of course, the US, they have pretty good numbers in comparison to the average of the last 5 years. You can see from 2020, to 2023, for example, that they produce around 45, to 49. last year was a pretty good crop. This year is lower in comparison, to the last year. We are obtaining slightly lower numbers than the USDA, mainly because of the spring wheat, right? But it's not significant in comparison, to previous years. Okay. And of course, the big issue, with the US is the exports, right? As you can see, in previous years, they used to export around 25, 28 million tons. In the last 5 years, it has been around, the 21, 19, based on the relations, on this country, with other countries, right? That 24 million tons, that we have there, it could be quite bearish if it goes, to the 21.8, for example, that the USDA is forecasting, or it can go even lower, right? Depending on the agreement, for example, that they do with India, for example, they could import a couple of million tons or deals, like that, right? The next one is the Indian production, right? So Indian production is interesting because for the last 2 years, we obtained lower estimates than the government data. So the 110 and 111 that you see there, we were obtaining around 106, 105, based on the floods, high temperature events, and many other reasons. This is the first year that we have similar numbers to the government or similar numbers than the USDA. There's many estimates around India, and there's satellite data estimates as well, and they're confirming that the crop is around 118, 119 million tons. There's been significant rainfall during the harvest in the month of May, so that could affect maybe 1 million tons, the production estimate, but still, the best crop ever for this country. This is important because they were running out of stock in the last season, and if they don't run out of stock, this year, they wouldn't need to import as they did, for example, in 2016 or 2006, right? What else? The next one and the final one that for me is the critical one, for this year, is the consumption of the major importers. These are countries such as Indonesia, for example, or Egypt, right, and many and the big bucket of importers of countries, right? They used to increase the consumption, by 3-4% every year. That happened, from year 2000 to 2018 or 2017, sorry. And then after that, after COVID and these countries, being high debt and a couple of different reasons, we saw the consumption of these countries not really going higher, right? Because of that, the imports also have been affected. So you can see that the imports, for this year, they're quite stable in comparison, to 2023, for example. We have exactly the same level, right? And because they're not going up, we don't get that reactivation of consumption and lower stock levels around the world. But anyway, we're going to deep dive on that in the next slide. In relation to the price, with the current S&Ds, by the way, high level, we've been obtaining around the 550, with the current status quo. If you use the USDA S&Ds, we're obtaining a little bit lower, like 530. This is for the December, Chicago contract in USD cents per bushel. And if the consumption, reactivates, we're obtaining around, the 600 cents per bushel. That's basically the latest trend, from our price models for the Chicago market. Okay. Yep. So deep diving on the imports and consumption of the biggest importers, which is critical, and this is the main reason of the bearishness, of the market. If you look at the top right, we have all the importers together, taking out India. You can see that the stock to use of these countries is the lowest, since 2001. We thought that this was going to be impossible, to reach this level, but they keep, reducing and reducing. Here I cherry pick, 5 of the top importers, so Egypt, Iran, Bangladesh, Indonesia, and Philippines. And you can see, that they went, from the 30, between 20 and 30%, stock to use, or even higher. They are all closer, to the 15% or below the 20%, stock to use, right? The main reason that we found, from our models, by training consumption on these specific countries, is that these countries, they have high debts, so that's pushing up, the forward buying. Also because the global interest rates are quite high, especially the interest rates, in those specific countries, it's very high. They cannot do forward buying, so they only have stock, for the next month or for the next 2 months. And they're only buying, what is essential. So they only buy, spot tenders. So according, to our models, what it needs to change, in the future, so we can see a reactivation of these countries buying forward and going back, to the 25% stock to use. We need, the Fed, to cut the rates. So that would create, the domino effect, for these countries, to reduce their rates as well. And they would get, cheaper USD credit. We need, the USDA to weaken further. So we have seen, in the last couple of months, for example, that the XY has been going down, but we need more of that. If the prices drop, that has been happening, for the last couple of months, for example, in some particular weeks, these countries are going to buy. Like for example, we saw Saudi Arabia, buying, this week, right? Or filling, a tender of 600,000 tons, right? So, and then finally, if the inflation of these countries, go up, we might see an unrest in these countries, and that could force, the government, to buy forward, right, to push the prices down, and that's something, for example, that was happening in India, last year, right? So in general, using, the average of the estimate, from Bloomberg for all the macroeconomics, we're still getting, quite bearish, the consumption of these countries until something significantly change, right? We did think, that this change was going to happen at the end of the last year, right? But because of what's happening today, with the U.S. Politics, right, still not happening at the moment until, we recover, the certainty of the markets, right? Okay, so that's it, with the global S&Ds for wheat. Now a little bit of a deep dive in Australia. So this is the latest production estimate for Australia that we released last week at this regional level, which is called statistical area level 2. We have individual models, for each one of the regions, and this is what we obtain using the year-to-date data. And for the year to go, we use the seasonal weather forecast that you see here. Okay. So in summary, as you probably already know, we have very low soil moisture for South Australia. It's basically the worst of the last 25 years. So they're close, to what happened, for example, in 2019, but we're in 2025. Similar situation in Victoria, but a little bit better in Victoria, and a little bit better in South Central New South Wales, but still, quite dry, depending on the rainfalls, that they're receiving today and in the next couple of weeks. Similar situation is also happening in northern Western Australia, which they only receive around 20-30% of the median rainfall, for the last 3 or 4 months. Okay. On the other side, you have some of the best crops ever in some of the regions. So in northern New South Wales, for example, most of the farms, that we have models over there, they are around decile 9, 10. Similar situation is happening in Queensland. Queensland is not much planted areas, as you know, but still, we're getting limit up, with the yield that they can obtain. And similar situation in places like Esperance in Western Australia, or Mukimburin, for example, in Western Australia, which is the highest planted area region, for wheat. We are getting really, really good estimates, based on the receival of the rainfalls and the forecast of the rainfalls, for the next couple of months. If you look at the rainfall forecast, May was very dry, depending on what's going to happen in the next couple of weeks. So pretty much all the states are getting around 50% of the median. But there's supposed to be a recovery in the next couple of months. And also because we have the negative IOD now confirmed, by BOM, it's also pushing, the seasonal weather forecast higher, especially at the back end of the season or at the time, of the harvest, and that could have an impact on the protein. Okay. In relation of the direction of this forecast, which sometimes, it's more important than the forecast, than the seasonal forecast itself. Australian numbers, has been moving around the 31 and 33, right? So quite stable, between that number. So positive differences, like in northern New South Wales and Queensland and Western Australia are offsetting, the differences in South Australia and Victoria, right? Then we have New South Wales and Western Australia. They're kind of like moving sideways, a little bit higher as well. Then we have Queensland, that it's very close, to get to the limit of the yield. And then we have South Australia and Victoria that they keep going down because the conversion of the focus or the realization of this number keeps happening, keeps being lower, when in comparison to what the focus was. Okay. Yep. So that's it for Australia. Now high level, for the European Union. European Union, as I said before, they have a pretty good recovery in comparison to the last year. Conditions year to date, they've been drier, of course, in comparison to the last year. The big issue in 2024 was that the soil moisture was too high, so they couldn't plant as much as they wanted at the beginning, and it also had an effect on yields. Okay, this year the rainfall season to date, from the sowing, to May, it has been close to the median, a little bit lower than the median in Germany, a little bit lower than the median, in France. So that's affecting a little bit the yields, right? But we're still getting, 135 million tons if you include, soft wheat, with durum, and we are getting close to the highest yields ever, for durum, and that's mainly because of what's happening in Italy and the year-to-date conditions, in Italy. At the moment, we have a mixed bag, with with the soil moisture. But if you look at the top 5 countries or top 3 countries, such as Poland, France, and Germany, the soil moisture is significantly low. This is supposed to recover in the month of May. So in the latest forecast, we have close to the median rainfalls, and we have close to the median or above the median, for the next couple of months. So that's one of the key reasons, the yields are not going as low as they could go, right? Okay. In relation to the movement of the forecast, the forecast has been trending a little bit lower. So our number was 137 last month. This month is around 135, so it keeps converting a little bit lower. So if we continue with the same trend, we could end up a little bit lower, right? If we look at the number by country, France, Germany, at the moment, it's moving sideways. So last month, reduced a little bit, but the previous month, it increased. Poland and Italy, they are increasing on pretty much every iteration that we run the numbers. And Romania and Hungary and Denmark, they keep going down and down. Okay. So, yep. So that's it, with the short snapshot of the wheat production in the European Union. By the way, you can ask us as many questions as you want at the very end, and we can look at different commodities or prices at the very end. So anyway, if you just want to keep one snapshot of this presentation, let's talk about bullish and bearish factors for the wheat market this year. We are a bit more bearish. What we have seen from the models, right? As I mentioned before, the range is between 550 and 600, but we're getting closer to the 500 based on the macroeconomics. To the 550 based on the macroeconomics, right? So on bullish factors, I did mention the Black Sea. So the disruptions, the negotiations, between Donald Trump and Putin, of course, it's quite important. So we're talking about like between 5 and 10 million tons of more supply. The main exporters low stock to use. If we take out, the US, it gets even worse. The China production decreasing, so that could be really, really good news, for the exporters such as Australia that we export, to China. And by the way, that's not only happening, with wheat; it's also happening with corn. Our first corn number, it's much lower in comparison to the USDA. The world ending stocks, we are forecasting an 8 million tons deficit in 2025, and that's quite bullish, for the year. And then on the bearish factors, we have the recovery of the European Union. So that's reducing, the massive price, of course. And that's one of the reasons, the speculators, we're going short. Then the US strong production and the low exports in the US, right? So that they could accumulate, more stock. The USDA is forecasting that they're going to recover the stock and they're going to go, to the 47%, stock to use, for example. So that's why when we use, the USDA scenario, we have the 520 instead of the 550 cents per bushel for the December contract balance of the year. We also have the confirmed record high Indian production. So this might not be the year that they need to import, but maybe if they have zero tariff, with the US, they might import 2 million tons, something like that. Then the major importers low consumption. So those countries only depend on macroeconomics, as we saw, until we see a recovery of the macroeconomics, or we see better macroeconomics than the ones forecasted by the analysts in Bloomberg. We're not going to see a recovery of those stock to use. And finally, one additional one is the US corn production. Our first corn production estimate for the year, it's very close to the USDA number. For example, in 2022, our corn 30 or 40 million tons lower than the USDA. They ended up being very close, to our numbers. This year, we don't see much of a risk, for them to reach the 400 million tons, mainly because we don't have El Niño or La Niña. We don't have a transition year, from La Niña to El Niño. And at the moment, the conversion of the forecast, so the realization of the seasonal weather forecast in the US has been quite good. Okay. So yep. So that's it. Now with the Q&A.
Yeah, please put your questions in the chat window.
I mean, if you have any questions. Q&A. Okay. By the way, if you can ask about any specific country or price estimates or anything else, in the time that we have left. Okay, Peter. Yeah. Carolina, you want to go on mute, please? Okay, so thoughts on global corn demand and spread, to wheat moving forward. So at the moment, we do have, I mean, the corn demand, depends on what the US, it's going to do with the policy, of course, right? So there's very different scenarios, depending on the final outcome, and soybean as well, it's connected, to that. At the moment, for corn, we do have. I mean, let me just show you my screen. One sec. One sec. Yep. Yeah. Okay. So this is the Octopusbot portal, with the different S&Ds, that we have for the year. At the moment, for corn, we do have a massive surplus, for the year. In comparison, with the wheat one, that we have a major deficit, right? This is the US production, that we have for the year, which is actually very close, to the USDA, right? So in terms of consumption, we do think that it needs to go significantly. Sorry, my mistake. We do have a deficit. Sorry, my mistake. At the same, with wheat, in relation, to the consumption, it does depend, on the policy on the US, right? And the spread, it's going to depend on how low, the stocks, the ending stocks of corn, in relation to the wheat can go, right? So yeah, it's a very tricky question, but at the moment, we do have. Let me see. For corn, we're obtaining similar prices, to the ones, that we have today. If we use, the USDA S&Ds, the numbers, are very close, to the ones, that we have today. So yeah, so we don't see like a big difference, like in comparison, for example, to the wheat market, that we have lower prices, than the current spot market, for example, than the current, December contract. And if we use, the USDA scenario, for example, we're getting closer to the 530, right? So basically that says, that the spread, between corn and wheat, should widen, like across the season, right? And I think the other question, was around Matif. Matif, at the moment, it depends on the consumption. So we're getting, between the 200 and 215, right? The range, my particular scenario, would be, closer, to this number, right? So, and this is, for the back end of the year. So between October and March, as you can see, the scenario number 2, this is saying, that we should go around, for September, we're getting around, the 200 euros, per metric ton. That's what we're getting, from the models, using our S&Ds in comparison, to the USDA scenario, right? With the USDA scenario, we are getting a little bit lower, by the way. Okay. And that is mainly because they have slightly higher production in the European Union. They also have slightly higher production in the US, and they have lower export, in the US. So they're ending, with the 47% stock to use in comparison to us, that we have like the 44% stock to use, right? Okay. Yep. Do you guys have any other questions or anything else that you guys want to? Yep. Don't cover wheat, we send US corn, so the barley, and it's good for our. Yeah, okay. We do cover sorghum, by the way. So we do have estimates for Australia. We do have estimates as well for Argentina in South America, for sorghum. We're planning on doing US. That could be important, for some customers, right? And yeah, we also, it's important, for us to look at the S&Ds of sorghum. We have many customers in Australia, interested in that. And then for the view of the US corn and soybean production, yeah. So for let me go into that one. I'm not gonna go to the specific estimate, but for corn at the moment, we're getting slightly lower, than the USDA, around 397 million tons. And for soybean, interestingly, we're getting 119 million tons, which is 1 million tons higher than the USDA. Okay, that would be, the best yield in history. There's many things, that they could change, of course, right, depending on the realization of the forecast. But at the moment, in particular this year, we don't see much risk of those seasonal weather forecast. Okay, so at the moment, I mean that number, could go slightly lower, but at the moment we don't see a big risk, for those numbers to realize. Okay. By the way, did that answer your questions?
All right, if there are no further questions, I guess we can wrap up the webinar. Please feel free to reach out if you have any further questions that you would like to cover. And thanks so much for joining today and for your time. And we look forward to connecting again. Have a good rest of your day.